You are probably wondering what I mean when I say it's time for the Great Unpin of 2024. Well, in today's Stock Market Brief Show, we're going to be diving in to the S&P 500 amongst other index products and give you some key levels as we're now moving in to the spooky month of October and the fourth quarter. Let's get into it. Welcome back, everybody, to the show. Yes, October is the spooky month where you typically see volatility, and then in the back half of the year, you get that Santa Claus rally and so much more. Now, what do I mean by the unpin of 2024? Well, back in September 19th, right over here on this little 30-minute chart, we talked about how the market could get hung up at 57.50. Why? Because there was so much gamma exposure at that specific level. And as you can see, as time moved forward, we kept on trying to break it, trying to push down. Then around this area, we said, even if you break above it, it's likely to come back and doodle around these levels. This is what I mean by the pin, and it's time to unpin this price action. There are a couple of things going on in the market that lead me to believe that is going to be the case. But why, more specifically, can we see this unpinned? Well, you may have been hearing about the whole JPMorgan Collar strategy, and this is a large position that expired September 30th, which could very well free the market. More on that specifically later. If you want to learn more about the collar, this is a good article that goes into detail and tells you exactly what and how this position works. There's a few things floating on Twitter as far as what is the collar trade, what are the levels, and I went through and I checked out on Thinkorswim too, and it seems to check out over here. Now, I do find it very interesting. Pay attention to this time over here, 11:23, because you could see how the market responded as soon as it hit the tape. It was crazy. Now, we also had Fed Jerome Powell out today, giving all kinds of different quotes, but one of them was looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance, but we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. Now, during his little talk today, you can see that ES was just not having it. We started to see an intraday sell-off, which it looks pretty intense on the 1-minute time frame. Volume picked up, sellers picked up, but then all of a sudden, out of nowhere, at that specific time right here is when the JPM Collar was executed. And we saw the market rip and rally, and now we get to watch to see how it digests. So it's important to mark out new levels, which we will do. So make sure to subscribe to the show if you haven't done so already, because this will be updating as we go through more time. Now, currently, the main level is 57.50, but we can see 5,800 over here growing in size and traders reaching out further. Below us is 56.95 or 5,700, and then there's some levels slightly below that. So what does this tell me in short as we're moving into the remainder of the week? It tells me that when we're above 57.50, things are looking pretty bullish. But if we're below it, watch out for about 50 points lower. Now, these were the quarterly expected moves, so it's going to be important to update this. Now, when we came into this lower level, this is where all the fear kind of hit the tape. You had some pretty massive volatility within 3 days. You can see we came down here and started to bounce. And now during this time, if you go back and watch this video on this specific day where we made a quick little, I think I was on vacation at that time, but I made some quick videos. These are the type of levels where, if you're a longer term investor, you can put some capital at work after seeing some, extended moves. But at this point, after seeing a little correction in the markets, I start to look for what's known as follow-through days. And these happen between days 4 through 7 of an attempted rally. So this was the bottom. You had day 1, 2, 3, 4, 5, and 6. And a follow-through day is a day that's up 1.2% or higher on more volume than the day prior. Then we had a back-to-back follow-through day. Now, no bull market has ever started without a follow-through day, and we haven't got out in any or continuation of a bull market after a correction without a follow-through day either. So this is why I pay attention to these levels, and after that follow-through day, we add more exposure into the markets. And even as price was kind of coming down, we actually had really good conversations about where we can see a potential shakeout, and I'll go over that actually momentarily. But I want to first call out the updated S&P 500 quarterly expected moves on this slide. So as you can see up here, these are the updated quarterly. This is the quarterly close for the SPX and the SPY. And these are the upper and lower levels that the market is pricing in. So one thing that you can do is be aware of these specific levels, the 60-20 for the upside, right? And then also the 54-25, level to the downside on this specific strategy for the JPM Collar. But what I like to do more specifically is just dive into these expected moves on the chart that I'm sharing right here. So 532 is the lower quarterly move. Upper quarterly move is 615.52. Now 615.52 is kind of interesting because we've been talking about the SPY forming a potential cup with handle. And right up and around this 615 to 620 would be actually a measured move from this breakout. Now that's just a technical measured move. It doesn't, mean a whole like a crazy amount, but that would be also in line with a measured move of this pattern breakout. It doesn't mean we can't see volatility, but that would be the upside target from a measure move perspective. Also, the quarterly expected move there too as well. Now, as I was stating, when we saw the volatility in the lower quarterly expected move, I'm pointing this out because if it happens again, we can be prepared. And then as we started to recover, we started to look for follow-through days. And then it wasn't until right over here, which I believe was August 19th or 20th, we started to talk about the Great Shakeout of 2024. And basically, in short, it means to look for a period of consolidation and a shakeout that could potentially happen before heading higher. And what we did was anchor a volume-weighted average price to here, and it kind of looked like this, somewhere around like that. And we said if it starts to come down into the anchored volume-weighted average price, look for strength, and then that could be a re-entry. Now, leading up to this is an important aspect too. We had this video calling for market conditions are changing. This was on September 3rd, I believe it was. You'd have to go and check. And basically what I was highlighting here, it's back on the thumbnail, was simply put, we started to move into negative gamma territory. And when you get into negative gamma territory, and when you get below a declining 5-day moving average, which we'll go into here momentarily, it's very common to see volatility increase. And there shortly after, we saw volatility increase and the S&P 500 came down and then started to recover. That is how I am going to really navigate this market, and I'm going to constantly update on this show, which I have been, to see whether or not we can be bullish to go up to this level or to be more cautious and target this by quarter end. That is what the approach is moving forward here for the quarter. Now, if I take a look at gamma lines right now, we're at about 56.95-ish for the gamma flip. That's going to probably update tomorrow. You can see that we have some exposure up here at 5,800, so that would be an upside target in the near term. Downside would be still back to 5750. You'd want to hold into these levels. But I wouldn't be necessarily bearish until we actually start getting below the gamma flip line. And when I mean bearish, it doesn't mean, hey, I'm going to short here. What it means is I'm probably not going to be adding much exposure into the market. I'll just be keeping on what I have that's working and then getting stopped out of the things that don't. Now, the 5-day moving average, if we take a look at the SPY, the Qs, and the IWMs, we are above a rising 5-day moving average on the SPYs, the Qs, and technically the IWM is flattening out to starting to calculate to the upside here. Semiconductors is giving us a little bit of a cautionary sign here, pointing to its yellow, which simply means that this is still calculating up, but price action is currently below it, so it's diverging. Then we have XBI down here, and this is why I say it's kind of important to watch this too, because once it starts calculating down, it's the short-term trend is currently down. So XBI, if we start getting back above this kind of 90, I'm just going to call it 100, this 100 level, that could put in a higher high, which would be a good sign, and the 5-day moving average could start turning around, and this could start lighting up green, which just tells us that the short-term average is potentially changing. Now, overall, though, if we look at the SPY on the 15-minute time frame, that was the 30-minute time frame, the 5-day moving average is starting to rather flatten out. So we want to really kind of break free from this, and this to start turning back up again. Going into tomorrow, which we do have quite a bit of data coming out, you can see over here we have ISM manufacturing PMI and JOLTS data there too as well on October 1st, Tuesday. The upper daily expected move is 577.27. The lower daily is 570.25. So that's what the market's pricing as far as risk right now. But for the weekly expected move, it could be up to 581.28, 561. So for shorter term traders, you can target up into these areas if we hold above this 5-day moving average. But if we start breaking below, start to pay attention to the lower expected move for the week. Now, that's not all I want to share. We give in the quarterly move, the weekly move, the daily, and then we also do the monthly expected move too, just to give an insight that if we do get a rapid move early on, like say, for example, if we came all the way up to here at 595 within October in the very short period, I would say, okay, this is probably a good time to take some positions off and or take profits and update stop losses to lock in gains. And then if we start coming down here very quickly, it could be a level where you can say, okay, now I'm going to start looking at some of the stocks more specifically that even if it's below this declining 5-day moving average, what stocks held up decently well, or what stocks may look a little extended, or even just index products, and potentially look to add more exposure if, whether you're a longer term investor, whatever the case may be. But those would be the levels that I'd be paying attention to if we see early on extended moves. Okay, let's take a look at the Qs on the daily time frame. Now the Qs, right, we closed up higher. We did come down a little bit lower, but overall, we're kind of just battling this prior area of resistance, and we're currently above it, and is currently acting as support right now. We did break out of this pattern, and a pattern like this would take us up to and around 530-ish to 540-ish as far as a measured move goes. We tried to come fill this gap, and we couldn't do so. Now, if we start seeing some more sell side, I'd be looking just down in and around this area at about 470 to slightly 475-ish, right around there where we had this swing anchored volume weighted average price into these areas, a gap fill, and then look for strength after that point if that's going to be the case. If not, right now, right, we're above the 5-day moving average in the Qs. It's still sloping up, and we broke out of this overall pattern. So right now, it's looking pretty bullish. We're above a 5-day moving average. We're in positive gamma territory. So the idea here will be looking for a continuation to go retest these prior all-time highs. For IWM, we've been holding this low anchored volume weighted average price over here. From that swing low, we started to flag out. We pulled into it. We saw some strength. We saw some weakness back into it, and then some continued strength. So still, this is kind of consolidating and holding this level, and I'd be looking for a tag of 225-ish, potentially to see it consolidate and move through that. But I'd only want to see that if we don't break down from this level. If we break down from this level, I'm not really interested at all in IWM. If you go to the 5-day moving average, and if we were to break down, that would be a new low, right? A lower low, a lower high, and on top of that, we'd have a continuation of the declining 5-day moving average. So when I'm looking at the 5-day moving average here on the 30-minute time frame, we're starting to see it flatten out. Price is currently above it. Maybe if we can break this high and or this high, that would be a higher low, boom, and that would be a higher high. And then you'd have an idea for where you want to put your risk, your entry, and then where you can target, like I just previously stated, on that daily time frame, up to and around 225 to potentially maybe even move higher than that. It's all about managing risk. So that should be your number one focus. It's not about predicting what the markets are going to do. It's to utilize technical analysis, intermarket analysis, and various tools to help you forecast and come up with key levels to really manage specific risks. Now, overall, for the remainder of the week, we do have some more stuff like ISM Services PMI on Thursday. We have non-farm payrolls on an unemployment rate on Friday. And Jerome Powell did say that he is going to be obviously paying close attention to all of this data, and it will impact their strategy moving forward. Last thing I want to close off with here is that earnings seasons is also going to kick off, I believe, next week on Friday, or at least 9 days out if I'm doing my math right. But we do have BlackRock, BK, WFC, Wells Fargo, JPM, are all reporting earnings, and it starts with the financials, then it goes into the other names. So buckle up. We're here to see a lot of volatility. The market just got through this big month, got a new JPM Collar. We have new quarterly expected moves, monthly expected moves, daily expected moves, and we know which side of the trade to be on, whether we're in positive gamma territory, whether we're negative, if we're above a rising 5-day moving average, or we are below it to target these key levels. That's what I do. You can verify my P&L on Twitter. I post it there, or you can go to the United States Investing Championship website, and I'll be updating my September performance, which should be posted by the end of October. Hope that helps. See you later.